Good evening or good morning, depending on where you are in the world. I'd like to welcome you to my review and informational educational series on how to write a business plan. Now, I'd like to let you know that the full credit to the intellectual property goes to the publisher here, which is Nolo, and by the author Mike McKeever. My purpose here is just to inform you on how to write a business plan, and I'd like to show I'd also like to use it as a review to show the great things about this book as well. So I want to reiterate, I'm not um, I'm not trying to take credit for the intellectual property. The full credit to the intellectual property goes to the publisher, Nolo, and to the author, Mike McKeever. Now, that said, good thing I like about this book, first of all, is that there's a table of contents. This makes it easy for me to review. Now, I'm going to be reviewing this book and talking about the content of this book. Okay? Now, what I'd like to talk about why you should be learning how to write a business plan. So if you like to have the independence of running your own business, although it is a lot of work, in the beginning you put the most amount of work, the first thing you need to do is you need to have an idea of what kind of business you're going to run. You need to understand the structure, the content, right? All the variables involved in writing a business plan. First, let's talk about the benefits of writing a business plan. Okay? Let's go to page 5 now. Notice we have other credits here, so and so, about the format of the book. I won't talk about that. Now, these are the benefits of writing a business plan. First, let's start off with what is a business plan. Now, what is a business plan? And hopefully this is large enough for you to see well. Now, a business plan is a written statement that describes and analyzes your business and gives detailed projections about its future. A business plan also covers the financial aspects of starting or expanding our business, how much money you need, and how you'll pay it back. That is, if you lend money. Okay, so I'm going to highlight this. I'll be putting screenshots of this stuff up on my Instagram. Now, putting notices that I've posted this also on my Twitter as well. Now, writing a business plan is a lot of work, so why do you take the time to write one? The best answer is wisdom gained by literally millions of business owners just like you. Almost without exception, each business owner is with a plan, is pleased she has one, and each owner without a plan wishes he had written one. Okay, so what we're going to do is now, why write a business plan? Here are some of the specific and immediate benefits you'll derive from writing your business plan. Number one, it'll help you get money. Why? Once we can get the business plan written, we can get the business started. Most lenders or investors require a written business plan before they will consider your proposal seriously. Even some landlords require a sound business plan before they'll lease you space. Before making a commitment to you, they want to see that you have thought through critical issues facing you as a business owner, and that you understand your business. Okay. In my experience, 35 to 40% of people currently in business do not know how money flows through their business. Writing a business plan with this book teaches you where money comes from and where it goes, where it comes from, and where it goes. Now, in the future, by the way, I will upload some basic finance courses about how money works. But let's do everything step by step, okay? Is it any wonder that your bankers want to see your business plan before they consider your financial request. There are many potential leaders and investors as there are prospective business owners. If you have a thoroughly thought out business and financial plan that demonstrates a good likelihood of success and you are persistent, you will find the money you need. Okay, so because the main concern when you start up a business is where's the capital coming from? It is. So you want to think about where you're going to get the money, how you're going to start a business. Of course, it may take longer than you expect and require more work than you expect. You will ultimately be successful if you believe in your business. Why? You need to be passionate about your business. You need to have passion and interest, and you need to have competence. But in addition to those two things, meaning you need to be interested in what you're doing and always be contributing positively and growing it. Just like you plant a seed in the garden, you want to make it grow, right? That capital is like the seed that you grow. Okay? But we need a plan, we need to think in advance how are we going to do it before we do it. If we don't know how to do it, how are we going to do it? See what I'm saying? Now, here's another main point. It helps you decide to proceed or stop. One major theme of the book may surprise you. It's as simple as it's important. You, as a prospective business owner, are the most important person you can convince of the soundness of your proposal. Why? Because it's you who has to do it. It's you who has to execute it, and it's you who has to grow it. That's what it is. Also, if you have a business partner, you need to sell them on the idea. When you get funding, you have to sell them on this idea that you're financially sound and that what you're doing is meets the criteria that they're looking for, wherever the funding is coming from. The idea is that if you have rounds of funding, which we can talk about in later lessons, that this has potential to grow, and that the cause that they're working on is serving people in a positive way. Therefore, much of the work you are asked to do here serves a dual purpose. It is designed to provide all the answers that prospective leaders and investors will ask. That's the first one. But it will also teach you how money flows through your business and what strengths and weaknesses your business concept are and what realistic chances of successes are. On another video, I can talk about this more detail, but just as a quick see, this is where I'm doing the informational and review is I'm adding to this. I'm not doing this word for word. I'm adding stuff to this. After you, as part of your business plan, you need to understand what you're good at, that's the strengths, what you're not good at, such as what maybe you can get help from other people in, as far as hiring a consultant, as far as having a business partner, etc. Then we need to understand our market in terms of the marketing, in terms of our overall business strategy and how we'll manage it. Thus, we need to understand our opportunities. Then finally, we need to compare what we have to what our competition has, which is our threats. So this is called an SWOT analysis. We also need to consider that as part of our business plan report. Now, the detailed planning process described in this book is not infallible. Nothing is, as the author would say, nothing is in a small business, but it should help you uncover and correct flaws in your business concept. If this analysis demonstrates your idea won't work, then you'll be able to avoid starting or expanding the business. This is extremely important. It should go without saying that a great many business people owe their ultimate success to an earlier decision not to start a business with built-in problems. You need to see in advance, is it viable or is it not viable? Okay, now, let's improve your business concept. Let's get you to think more about the idea and the concept of the business itself. Now, writing a plan allows you to see how changing parts of the plan increases profits or accomplishes other goals. This is the presupposition. You can tinker with individual parts of business with no cash outlay. If you're using a computer spreadsheet or make financial projections, you can try out different alternatives even more quickly. This ability to fine-tune your plans and business designs increase your chances of success. So what do we need? We need financial projections, meaning How's a company going to do financially? Are we going to win? Are we going to lose money? Or are we going to gain? And then for what time period? Remember, the business does things and is assessed quarterly, which means every 3 months, meaning a quarter of the year or every 3 months. For example, let's say your idea is to start a business importing Korean leather jackets. Everything looks great on the first pass through your plan. Then you read an article about the declining exchange ratio of US dollars to Korean currency. After doing some homework about exchange rate fluctuations, you decide to increase your profit margin on the jackets to cover the anticipated dollar declines in dollar purchasing power. This change shows that your prices are still competitive with other jackets, so your prices are still competitive, and that your average profits will increase. Average profits will increase. And you're now covered for any likely decline in exchange rates. Okay? Decline in whatever it is, exchange rates, whatever it is. Now, what we want to do is we want to improve the odds of success. One way of looking at business is that it's a gamble, meaning it's not guaranteed success. It's just a matter of how you manage it, and also if you're in the right industry. There's three things basically you have to look at. Number one, what industry you're going to be. Then we need to look at the segment of the market, otherwise known as an industry. What market we in, which indicates the industry or what product or service is going to be produced. Then we need to specify what segment. For example, suppose we're in the car business. We say, okay, industry is cars. What kind of cars? Compact, mid-size SUVs, or for example, trucks. That's your segment. And so we need to pick one or more segments, preferably just start off simple with one segment first. And say, okay, for example, compact cars. What kind of compact cars? EV, electric vehicles, gas powered. See? And then once you have that idea, then you then you research which brand you should be buying. Okay? Now, the other thing is it improves your odds of success. So you need to think all this through, all this out, organize all this out. Why? Because we want to improve our odds of success in the business. One way of looking at a business is it's a gamble. You need to expand a business and gamble your and bank in the bank's or investors' money. If you're right, you make a profit and pay back the loans and everyone's happy. But if your estimate is wrong, you and the bank of investors can lose money and experience the discomfort that comes from failure. Of course, a bank is probably protected because it has a title to the collateral you put up when you get the loan. So we'll talk about the collateral in chapter 4. Now, writing a business plan helps beat the odds. This is our main point here. Most new small businesses don't last very long, and most small businesses don't have a business plan, which is quite weird, but that's what it is. Is that only coincidence, or is there a connection between two seemingly unconnected facts? My suggestion is that let someone else prove the connection wrong. Why not be prudent and improve your odds by writing a plan? So we're driving home the point here. Now, the next thing is it helps you keep on track. We need to have a focus on what we're doing. Now, I'll give you one pro tip. What you do every day when you run a business, no matter how small it is, we need to have an agenda. What are we going to do that day? What we do is we either write it on paper, type it up on the computer, a record of that. Okay? Better actually if you have redundant copies, meaning a physical and electronic copy. And if you have electronic copy, you can subdivide it and say like one on my computer and or one on my device, and then one into like Google Drive or some cloud service storage service. So what you want to do is you want to understand that this helps you keep on track. Many business owners spend countless hours handling emergencies simply because they haven't learned how to plan ahead. This book helps you anticipate problems and solve them before they become disasters. Okay? So this is kind of like an ounce of prevention is worth a pound of cure, as the saying goes. A written business plan gives you a clear course towards the future that makes your decision making easy. Okay? Some problems and opportunities may represent a change of direction worth following, while others may be distractions that referring to your business plan will enable you to avoid. The black and white of your business plan will help you face facts of things that don't work out as expected. It's basically an off or on situation. Either you're doing it or you're not doing it. On is you're doing it, off is you're not doing it. For example, if you plan to be making 3 months, excuse me, if you plan on making a living after 3 months after startup, and 6 months later you're going into a hole at a rate of $100 per day, your business plan should help you see that the changes are necessary. Okay? It's all too easy to delude yourself into keeping a business going that will never meet its goals if you approach things with just another month or two, I'll be there attitude rather than comparing your results to your goals. Now, I should clarify this point because in some businesses, depending on the business, you don't make a profit for anywhere between you don't start making a profit anywhere between 1 to 3 years. Notice I said profit and I didn't say break even. Remember, the profit is making more than you spend, meaning your revenue is more than your expenditures. Issues beyond the plan. In this book, they've written to provide with an overview of issues that determine success or failure in small business. Experienced lenders, investors, and entrepreneurs want a plan that takes all issues into account. What do you want to do? You want to take all issues into account. Of course, this book can't cover everything. Here are some of the key components that are left out in the initial, excuse me. So these are the key business components that are left out of the initial planning process. Now, first thing is bookkeeping and accounting. This book here that the author has written that I'm just giving a review on discusses the numbers and concepts to you as a business owner need to in order to open and manage a small business. You have the responsibility to create bookkeeping and accounting systems and make sure they function adequately. Okay? What we need to do is we need to keep track of the inventory, we need to keep track of expenditures, and we need to keep track of customers in terms of revenue and other regulatory issues. Some suggestions for setting up a system are contained in Chapter 6, which we'll talk about. Okay? So what I'm going to try to do is, because I've got a marketing course over 2 days a week, so I'll try 3 days a week to go over this. I have limited time during the week, so I'll do my best. So what I'll try to do is I'll try to get this done in 1 month. But no promises. I'm gonna try. To do that. Okay. So anyway, so basically, what I'd be aiming for is Monday, Wednesday, Friday. Sorry, Monday. Yeah, Monday, Wednesday, Friday, and Saturday, and maybe Sunday. Maybe we can do Sunday, but we'll try for that. Okay. If I have more time, I'll release it more often than that, but at least 3 times a week is a minimum. One of the items generated by your accounting system will be a balance sheet. Now, this is the backbone of accounting is a balance sheet. We need to balance out. That's why it's called a balance sheet because contains what's called a T account, where you compare your revenue versus your expenses, meaning how much money is coming in and how much money is going out. A balance sheet is a snapshot of a particular moment in time that lists the money value of everything you own and everything you owe to someone else. See, okay, that's basically accounts receivable and accounts payable. I want to put it that way. Now, in terms of taxes, this is also an important thing. Businesses have to pay taxes. This is a requirement. Well, there are a few mentions of tax issues throughout the book, which I will read in later videos, as in I'll paraphrase and talk about it. My goal here is not to read everything word for word, but I'm gonna everything. Well, I'm gonna try not to read everything word for word, but the idea is I'm gonna focus on getting you to understand what they're talking about, adding things as necessary, as I've already done so far. Now, most of the planning information doesn't discuss how taxes are calculated or paid. In this book, it will focus its efforts on making profit and positive cash flow. When I talk about cash flow, that means when I talk about cash, I don't mean that you have cash in here. That means that you are generating revenue. The reason why it's called cash is because it's what's called a liquid asset, meaning it's something that can be easily turned over um, for revenue. Okay, so you have hard assets and you have liquid assets. Hard assets are things of a physical nature that have value, that can either go up or down in value. Liquid assets are things that can be very easily converted over um, to revenue. Okay? From an asset, revenue is an asset, but you have a liquid and you have a just like you have a liquid, which is water. If you use the analogy, water is liquid, right? It can easily flow. Well, liquid assets can easily flow just like water. Hard assets are like ice. It doesn't flow as well. It's still worth money if we talk about the net value of a company, which requires this is way beyond the scope of this book. If you want to know more about that, I recommend you uh, take a course from MIT, New York University, or any other competent university. Talk about something called valuation. This is way beyond the scope of this because this is bare bones step one of the company. Okay? But just understand that there's other financial factors to consider. We consider how much a company's worth. When we start off, first we need to consider the cash flow. If you can't cash flow, meaning if you can't make money and easily convert a product or service to money, then then you don't have cash flow. If you make a profit, you'll pay taxes, but if you don't make a profit, you'll pay fewer taxes. Now that depends on what it is. So if it's sometimes you have to pay Social Security, or sometimes you just straight out have to pay like, okay, here we go. You pay your capital gains. Depends on the type of business it is. Now, if it's only you operating it, then yeah, it's different. If you hire someone, that's another story. It all depends on the type of business, which I won't go into here. Um, Now, a CPA or a tax advisor can help you with tax strategies. If you have the money, they're more than worth the money they spend. Just make sure that they're competent, they're experienced, and they're good at what they do. They will save you money. So whatever you spend, you probably save more than you spend. But even if you, for example, even if you save the same amount as you spend, it's still worth it because you still save money. All right, now there's also something called securities law. If you plan to raise money by selling shares in a corporation or limited partnership, you'll fall under a state or federal securities regulation. You can, however, borrow money and take it in as a general partner without being affected by securities laws. A complete discussion of these issues way beyond the scope of this book, just like I told you, valuations of the company is beyond that. For now, take note of that you must comply with securities regulations after you complete your plan and before you take any money into your business from selling shares or partnership interests. Now that's if you have a partner, okay? If you are if you work for yourself, you have no business partners, you don't hire anybody, that's a different story. Now, the other thing you're going to need for the business is your ability to manage. That's your management skill. Now, in this book, we're going to talk about how to write a very good business plan and loan application. Now, however, your ultimate, in addition to that, which is part of the business, in addition to that, your ultimate success rests on your ability to implement your plans. Meaning, I have a plan to do something. How do I do? How do I make this plan happen? That is affected by your management skills. If you have any doubts about your management ability, we're going to talk in the book. We'll talk on in chapter 12 about that. Also, in chapter 11, we'll talk about thought stimulating discussion management. This is for brainstorming. This is for getting you to understand things and getting you to think ahead of things. Now, issues specific to your business. This is how successfully your business relates to the market. Business environment and the competition may be affected by patents, franchises, foreign competition, location, and the like. Of necessity, this book focuses on principles common to all business and does not discuss the specific items that distinguish your business from other businesses. For example, the book doesn't discuss how to price your products to meet your competition. I assume that you have enough knowledge about your chosen business to answer the question. That will do it for this chapter, okay? Now, it doesn't sound like a whole lot until you've put this all together. I remember in summary, we're talking about the benefits of writing a business plan. Meaning, what is a business plan? Why do you write a business plan? What are some issues beyond the plan in terms of bookkeeping and accounting, taxes, securities laws, and your management skills, issues specific to your business? Okay. Now, also with the business plan, you need to also understand how you get money, how you decide to proceed or stop with the business plan. This will tell you proceed with the business plan or start a business plan or not start with a business plan and improve your business concept. So not just what are the financials, but there's other factors too. Also, we want to look at improving the odds of success and how you keep on track in terms of success in running a business. Think of the business plan as being the blueprint for the business in terms of a roadmap of how you're going to operate in a general sense. More specific details for each department of the business. You need to know generally about those things. You don't need to be an expert accountant. You don't need to be an expert investor. You don't need to be an expert IT person. You understand what I'm saying? But you need to understand how to manage things. You need to have a vision, stick with it, and you need to have a business plan and implement it. Right? Now, I will, if I have time tomorrow, I will do chapter 2. Okay? Now, I would like to thank you for watching this video. I know that you see value in this, and you wouldn't be watching this unless you're interested in about how to write a business plan. As basic as it sounds, a lot of people who don't do it, it's very important to consider. Now, it would help me quite a bit if you could please click like or thumbs up on the video, as I will have this uploaded to both YouTube and Rumble. It also pushes through the algorithm, that way more people will be able to see it, more people will be able to benefit from it, and be able to learn about writing a business plan so they themselves can run a business and benefit from that accordingly. If you haven't already, please click subscribe. That way you'll have access to all my videos on this channel, as I do have a growing variety of videos on this channel. And also, if you haven't already, please click the bell button, you'll be notified of all my future videos, and you won't miss any. I'd like to thank you again for watching this video. I'd like to wish you a great day where you are. Take care,